Hi, Juan, and I want to say a big hello to all my friends that are here and a lot of my traders that are here in this room tonight. I will be presenting today 5 winning steps that 5% of traders use to make a killing in the market. And as you can see from today, most of the presenters here have a really well established game plan, right? So this is, if you come to one conclusion at the end of this 24-hour, not a telethon, trade-a-thon, okay, rather, you see that all of the traders that are here and that are sharing information with you have a really well-established trading plan. And I think this is key to your winning success. So I'm going to be your presenter today. Just want to let you know that you can post questions here, and if I don't get to answer all your questions, because I have prepared a lot of material for you tonight, and pretty soon I'm going to be presenting you the agenda for tonight's presentation. Make sure you send all your questions to info@TradeOutLoud. You can also find me on Skype. It's Trade Out Loud, and also you can find me on social media, but if you go to my website, you find all the links for social media, etc., etc. Okay, so before we even continue, I want you all to read the risk disclaimer. And what we're saying here basically tells you that all the information is for educational purpose only, and that trading involves a high level of risk. If you should need to seek financial advice, please contact your financial planner or broker. All right, so a lot of you know me. A lot of you maybe don't know me, and I am a professional independent trader. I'm focused on equities and currencies, and I sometimes trade futures. I'm the founder of CEO of TradeOutLoud.com. This is a trading education company based in Metro Detroit, Michigan. We do have a lot of education courses for equities and currencies. We also have services and products, so feel free to check us out. I have over a decade of investment banking experience prior to becoming a professional independent trader, and I have over 20,000 hours of full-time trading, and I've been trading for more than 10 years on my own. So I'm making a living on it. I am certified from numerous financial institutions throughout Europe and US, and I do run a managed accounts program for my net worth clients, and yes, so I do trade their money besides my own money. And I also run a very successful signal service for swing traders for equities and for Forex. And I'm the designer of a trading system and I have to tell you here, it is a very simple trading system that is based on price support resistance, with specific trigger times correlated with chart timing and a set of precise trading rules, so it's nothing sophisticated. A lot of you here know my work from Trader Planet, Your Trading Edge, Active Trader Magazine, Businesswomen for You, etc., etc. And if you go to my LinkedIn page, you can read some of the articles that I have published in these magazines. Okay, so enough about myself. I want to get to know you guys. So first of all, I'm going to ask some simple questions, and I want you to answer. But to be very honest, type a 1 in the room if you have trouble finding high probability trades. Type a 2 in the room if you're not disciplined enough to stick with a single strategy. Type a 3 in the room if you don't know when to exit your winning trade. And type a 4 in the room if you never know how much you're risking. Okay, so I can see a 1, I can see a 2, 2, 2, 2. All right, common problem number 2. Okay, absolutely, and finding high probability trades as well. 1 and 2 are predominant here. Okay. Yeah, live out loud. All right. Hi, Ed. All right, so if you have answered one or two or even three or four, these are all very important elements of a trading plan, and we're going to be talking and discussing extensively about this today. And it is very important to find high probability trades, and that's why my system works. It is a very simple system based on time, and I'm going to show you a trade that I did today for my swing trading signal alert service, and we captured a dollar move and all in today's trading with the gap down in the Qs. We played the Qs and we bought the Qs at $94. We had about a 40 cent stop, and we averaged about 2.5 hours in today's trading session for the Qs. And because we did know exactly when to initiate the trade and why to initiate the trade, and because we know how to read behind the candlesticks, so we know how to read other traders' psychology. All right, so let's get started with today's agenda. So today we will be talking about why is it important to follow these 5 steps, 5 winning steps. Then I'm going to present to you these 5 very important steps that I follow each and every single day to make money in the market. Even though it happens to have losers. So there is no trader on the planet that only has winners. I got to tell you that. But at the end of the day, at the end of the month, draw the line. At the end of the quarter, draw the line, and you're going to be positive following these steps. Also, I'm going to show you how to apply these 5 steps to your strategy. If we have enough time, I'm going to go over and take a look at the market overview. We're going to go over the Qs. We're going to go over the SPYs and see what is in store for tomorrow and for the rest of the week for the major market indices. And also, I will be sharing with you my hot list, my 12 stocks that I will be watching for tomorrow and for this week for potential entries. And at the very end, questions and answers. And once again, if I don't get to answer all your questions, please email me at info@tradeoutloud.com. All right, so why is it important? Why is it important to follow these 5 winning steps? Well, first of all, who doesn't want positive results and fast? Who doesn't want positive results and fast? I know I do. When I first started trading, I wanted positive results fast. But guess what, guys? 3 months into my trading, I was kind of like a break-even trader. So I was not achieving those positive results fast because you know why? I was one of those traders that believed that the trading plan is right here in my head. So I don't have to have anything written down. It's all here in my head. I had everything under control. Well, it was not the case. And after 6 months of trading, my first time in the market, my first 6 months in the market, I knew I needed a plan, and I knew I needed a written plan, and not a plan that I would write and have in my drawer. No, a plan that I would follow each and every single day. It would be more like a checklist type of plan. So you're going to get positive results fast by following these steps. It will improve your trading confidence. You're going to have confidence. You're going to know exactly when to enter the trade. You're going to know exactly where and how to enter that trade. You're going to know where your stop is and where your profit target is. And you're going to know your risk from here, and you're going to know your reward, okay? And I also teach my traders damage control, all right? Because we're swing traders, and, you know, in a case like today, all right, so the market, the Qs gap down, and you need to have a damage control plan. What if you were in the Qs at $95 long, hypothetically? All right, not that we would, but hypothetically saying that we were at $95 long and our stop was somewhere at $94.50. And stops don't hold. So what do you do when the market opens and the Qs, you find out that the Qs, let's say they open at $94 or even lower? You have to have a damage control plan, all right? And we're going to talk a little bit about this damage control plan as we're going to go over the Qs and the trade today, because basically we were looking and discussing this morning about this damage control plan, and we ran over the cues, right? And we were watching the cues, and this is how the trade actually came across. All right, so it really improves your trading confidence. You're going to have confidence. You're going to know exactly what you need in the market. Oh, and by the way, guys, at the end of the session, if we have time and if you have some stocks that you would like me to have a second look at, you will want my bias on them, feel free to type them in the room. Okay, so the third thing is decision-making skills and results. It will improve your decision-making skills and results. You're going to see that you're going to take a look at a chart and you're going to know exactly what you'll know exactly what you need to do. So the technical image is going to speak to you. The charts are going to start to speak to you, and you're going to know exactly how to react. You're going to know exactly what to do. And remember, trading is your business, right? Trading is your business, and the stocks are your employees, right? All right. So it'll teach you how to eliminate mistakes, and more importantly is that you're not going to need, anybody, you're not going to need, a coach or a mentor or anything. You can actually be your best coach and your best mentor if you go over the trades that you have done. And there's a very simple method to do that. And when I first started trading, what I did is I would print out two charts of the trade that I took, the time frame for the specific time frame that I took the trades on. So let's say if I would trade BRCM, Broadcom, let's say on the 15-minute chart, I would print two 15-minute charts. And what I would do is on the first chart, I would actually note my entry area, my stop area, and where I got out of the trade. And on the second chart, I would basically write exactly where my stop should have been based on technical analysis. I would mark where my entry should have been, where my stop would have been, and what would be the optimum exit for that trade, optimum profit area for that trade. And comparing the two, after you have done like tens and hundreds of these types of comparisons, you will actually learn from your own mistakes, and you will see what actually works in the market. You will learn a lot about each stock movement and fluctuation. So you will learn the pattern of each stock. So definitely, this is a great way to eliminate mistakes. Also, it will create focus. Okay, so you're going to be in that Zen area. It's going to be you, one with the chart, and the chart's going to tell you what to do. So you're going to be in perfect harmony with that chart. You're going to be in perfect focus. Also, the most important thing, guys, that can possibly be out of this is that it's going to stop your account leakage. All right, we don't want red accounts. We want our accounts to grow. We don't want them in the red. So most importantly, it's going to take you from a novice trader to a trader that can pull actually consistent profits out of the market. All right. So what are these fantastic 5 steps that only 5% of the traders take? And by the way, why do I refer to 5% of the traders? Because this 5% is actually the percentage of traders that really make money, truly make money in the market. Okay. First of all, you need to have a game plan. All right, so you need to have a very set game plan. You need to have a trading plan. Just like an architect has a blueprint for his masterpiece, this is the same way, the same concept applies to trading. You need to have a plan in order to have a winning trade. The second thing is focus on the technical image. Remember, the chart is everything. The technical image, the technical chart is going to tell you exactly what you need to do. And all you need to do is just focus on the chart and focus on what the chart will tell you to do. Third, it is crucial, risk and reward. This is imperative that you know. How many of you here receive emails? I mean, my inbox is flooded with traders that are trying to sell stuff, and they're saying, I made 5% on this, I made 102% on that, I made 70% on this. But the question is, all right, okay, so that's the reward. But how much did you risk to attain that reward, right? So in order to achieve 5%, did you risk 20%? So see, you're not getting the whole picture here. So that's why it's a little bit of, with a little bit of work, you can achieve this, and you can be your own moderator. You can be your own mentor. You can be your own coach if you respect these 5 simple steps. The fourth very important step that you need to follow is position size appropriately for your account and for your trade. And we're going to develop on this later on. These are all subjects that we're going to tackle in detail in a few minutes. And trade management, very important to know how to manage your winning trade. I know a lot of you here answered one or two to the questions that I've posted earlier, and I just want to tell you that management is a key factor in a winning trade, because how many times and first, when we start trading, a lot of us are in trading rooms, and a moderator calls out a trade, and you as a beginner trader take the trade, not position sizing accordingly, not applying the right risk to reward, not having your own game plan. And you know what? You find yourself that the moderator made money on that trade, and at the end of the day, you lost money. So you're asking yourself, what happened? Well, basically what you're doing is you're trading somebody else's trading plan. All right, you're trading by somebody else's rules. Okay, so you're not focused on your game, or you're not focused on your style. You're not focused on your business, and that should be the major focus, your business. And therefore, you got to have a very good trade management plan. So bottom line is, these are the 5 most important steps that you need to follow, and we're gonna go in detail right now. So, like I said, you need to have a game plan. Now, how many times have you heard plan your trade and trade your plan? We're talking about your specific plan, because us as traders, we're very different from one another. One trader is more relaxed, and they want to be, they don't want to be so aggressive, and they don't want to scalp the market. They would rather trade more on the trend side and focus more on the higher time frames. They either want to go shift towards trend trading, let's say on the 5-minute chart or the hourly chart, or they want to become swing traders on the hourly chart or daily chart. That would be their major focus. Some traders, are more aggressive, and they like to trade the 2-minute chart. They like to trade gaps right from the open. So therefore, you should have your own individual trading plan, and you should only trade what makes you comfortable and whatever is tailored for you according to your taste, your preference, your psychology. Now, every successful business, like I said, needs the business plan, and so does your trading business. Your trading is your business, and you need to treat it as such. There are a lot of benefits of having a trading plan, and first of all, better timing. It will determine the timing. It will determine the time that you enter the trade. It will determine your entire schedule. So if you're a day trader, let's say if you're a trend trader, you know that there are specific times in the market. You really don't need to be in front of the market at all times if you don't have to. There are specific trigger times in the market, and I teach that in my courses. And it's actually very, very simple. And a lot of traders that took my classes right now, the majority of them, are trend traders, but they find themselves that, they have a job, and let's say they come home in the afternoon, and they know that they can trade from 2 o'clock, and what style they need to trade from 2 o'clock. So that is a game plan of its own, and it is very important. So timing is very, very important. And then again, it enforces discipline. If you have a written plan with a checklist, it tells you exactly what to do and what not to do. Also, it creates a lot of focus. You're going to be focused on your work and you're going to be focused on your stocks. And by the way, one of the best trigger times in the market, and I'm going to reveal this, is 11:45. And just watch it, guys. Watch trading tomorrow, 11:45. I know it's in the doldrum period, but that is a very good trading time for the afternoon. Also, it creates a lot of confidence because you know when the you know exactly what to expect from the market. So you know, let's say the market opens at 9:30. You know that the first reversal time and that kind of like that fleecing is happening until 9:35. So within those 5 minutes, there's a lot of craziness in the market. And then you know that if you are a more laid-back trader, you're going to let that whole thing settle down. You're going to wait the first 30 minutes, especially if you're a swing trader, not a very aggressive trader. If there's something like, for instance, right now, like we're having, we're just starting the earnings season. Yeah, we're going to pay attention to gaps in the morning. But if we're early in the earnings season or in the latter half of the earnings season, we want the trend to settle. So we're going to wait after 10 a.m. So knowing these timing elements creates confidence in our decisions. So we know that, yeah, we're going to come in front of the computer. We're going to watch it from 9:30 till 10 o'clock, and then we're for the trend to establish, and then we're going to try to find a trade. So it gives you confidence of what you need to do for that day. Also, having a game plan eliminates emotional decisions. And remember, you're not going to chase a trade because you're going to have precise trigger times. You're going to have precise trigger signals on your trades, precise areas that you need to buy or sell. So it's going to eliminate these emotional decisions. Or, you know, if you have a good management plan in place, you're not going to, once the trade goes against you, you're not going to be scared. Losing is part of the process. Losing is part of the trading plan. Or if the trade is running towards or past your profit target areas, you're going to know what decision to implement in order to capture most of the moves. You're not going to take yourself out of a good trade. So this is the biggest trading decision that a lot of novice traders make. They reach a profit target area and they take profit. No, let the market take you out, okay? Also, it's going to measure your performance. So this is very important. So this is part of journaling. It's part of the trading plan as well. You have to measure your performance, and you have to have a detailed journal of what's going on in your trading life, in your trading day. And that's going to give you a good outlook of what strategies are working for you and what strategies are not working for you. And you should insist more on the strategies that work for you and eliminate the ones that are really not working for you. It is 11:45 Eastern Time. It is 11:45 Eastern Time. Okay. Also, avoid mistakes. It'll keep you in check, and it'll make you avoid common mistakes from the market. And it's going to save you time and precious money. It's going to save you your account, guys. Like if I knew, not now, but if I knew right from the start that I really need to have this, and if I had someone, that could really show me exactly, this is what you're going to do, this is what you do at 9:30, this is what you do at 10 o'clock, to lay out everything so super simple, this is what you're going to do at 10:15, this is what you're going to do at 10:30, and this is what you're going to look for, things might have been different, okay? So, also, having a trading plan. Also, one of the first things that you need to have in your trading plan is to have a defined strategy. Whether it is a buy-off support, whether it is a sell-off resistance, I always encourage traders to go with the trend. So I think it is very, very important always to respect the trend, because you're capturing a lot of profits, and especially in swing trading, you're capturing a lot of profits in your you're most likely to have that follow through when you're going with a trend compared to counter trend trading. I'm not against counter trend trading. Counter trend trading, I love counter trend trading as well, but only as a day trading strategy, not for swing trading. As a strategy as well, I love daily consolidations. I love consolidations in general. I think they're a great and they have been improving over the last 3 years. I remember a time maybe like 7 or even 6 years ago when a lot of breakouts or breakout trades would fail. But now more and more breakdown or breakout trades work. And this is because the market, after rallies, it takes a breather, it condensates. And then it continues or it retraces, and these breather areas create a great area for these bases. And there's a lot of money to be made at this. One of the trades, and because we're talking about consolidations, I'm going to bring it right here. I'm going to show it to you guys. It is a KKD, where patience really, really paid off. Well, patience really, really paid off. I'm going to show you the daily chart. So it is obviously a downtrending stock right here, as you can see. And this is the base. So patience wins the game. It gapped down on June 3rd, and you could see the base, the consolidation right here under $16. It just pinched that $16, and I have been in this trade since $16, since right here, and I've been waiting and waiting and waiting patiently until finally today. And you could see the area right here. You could see the previous swing low right here, just gapped down below this swing low right here. Now we have huge targets on this. One of the first targets for moving lower is into the 15, the 14, and also into the $12 area. We're going to see if we're going to have enough follow through with that. But with the market gapping down today, really helped this because one of the most important things to have when you're trading is to make sure that you're in sync with the market. Try to pick when the market is retracing, when the market is going lower, make sure that you're in sync with a weak stock, with a stock that has relative weakness compared to a strong stock. When the market is very strong, try to stick with very strong stocks because they have higher odds of follow through, higher, faster than the rest. All right, so going back to our trading plan. So the trading plan is going to tell you exactly how to find the trade. So you're going to look, it's going to teach you scanning techniques and all that good stuff. Also, it's going to take you, it's going to show you when to take action and when not to take action. And remember, guys, when the market is sideways, no swing trading unless you find something that is totally on its own. It's going to tell you when the optimum time for your strategy is, and I know that I've said a lot about timing tonight, but timing is very, very important for each strategy. It's going to show you exactly how to analyze and correlate market conditions to your trade, and we talked a little bit about this when I've mentioned KKD, Krispy Kreme donuts. And one of the things that is very, very important is to correlate, like I said, the market with the trade that you're in. You want to make sure that if the market is weak, you stick to weak stocks, and if the market is strong, you stick with the strong stocks. All right, plan, execute, and manage each strategy. This is going to tell you exactly, like I said, that checklist is going to be so super simple. Just plan, execute, and manage each strategy. So remember, not all setups and not all trades are the same. And even if you have a general trading plan that's going to tell you, okay, you got to, let's say, in terms of trade management, you're going to trail based on pivots, on stock pivots, based on the retracement areas. you have to make sure that that corresponds with the price action. So price action is very, very important for that particular stock, because there are some stocks that are most likely going to go aggressively into an aggressive, let's say, buy, or into an aggressive sell. And in that case, you can apply a different trailing strategy, because sometimes you really don't get those pivots. If you're having a waterfall short, or if you're having a very aggressive accumulation, you're going to see like bar after bar after bar after bar. So you're going to have a separate strategy for that. Also, follow up and trade evaluation. It is so important. Remember, look at the trades that you took, analyze the trades that you took, and then look at what you did, and look at the chart and what the chart tells you. Because when emotions are involved, remember, money is the highest commodity, and that's why we're so emotional when it comes to trading. Also, position size to your account. It is so important to position size for your account size. We're going to talk a little bit about this tonight. Remember, if you're a beginner trader, position less than 1% of your account size per trade, and this is going to protect you. This is going to protect you and your account from losses. And as you're consistently profitable, as you're building profit, you can go to 1 or 2% risk per trade, and for aggressive traders, even 3 or 4 or even 5% of traders that use more than 5% risk of their account per trade. Also, it's going to give you, this trading plan is going to give you the risk management guidelines, which are very important. Like I've mentioned before, when you're having waterfall, a stock that is just waterfalling down, or a stock that is aggressively going up, you got to know how to manage that. If it's going slowly with pivots and pulling back and moving forward and moving back and pulling forward, then you need to apply a different trading plan. Also, risk management guidelines, trade management guidelines, very, very important. So there's some conclusions to this. First of all, trading is 95% psychological, right? And that's why we need to have everything written down. And the fact that you're going to start making a trading plan right now, remember, it doesn't have to be anything sophisticated. Just 1 page will do. Just remember to evaluate yourself as a trader. Whether you're an aggressive trader or you're a more laid-back trader, determine the time frame that makes you comfortable, not the time frame that your general, your friends trade in the chat room. No, something that makes you comfortable, something that you're comfortable, and something that you grasp, something that you really understand, and stick to what you understand. And a game plan can protect you against your own demons. This is absolutely true. And having a trading plan is the only cure against losses, because it's like a mirror. You're going to look at this trading plan and you're going to see exactly what you did. Remember, detailed, each single trade of the day should be really detailed in your journal. All right, the second thing that we're going to be discussing tonight is the technical image. The technical image is very important because it gives us a lot of focal points. First of all, the technical image is a skill that requires education, and you have to make sure that you have the proper education before you even open an account. Okay, you have to have a little bit of experience, so you have to have time spent in front of the market, and it's very important. Even if you don't trade, you have to have a time spent in front of the market. Watch the market indices, watch a group of stocks. You could choose a group of 5 to 10 stocks and watch them every day. See how they behave. Watch what's in play for that specific day, especially now that we're in full swing in earnings season. See what happens. And besides, guys, in earnings season, most of the stocks, and this is why I love to trade earnings season, because in the first half of earnings season, you're going to get great follow-through on most of your trades. In the latter half of the earnings season, or while earnings season is winding down, you're going to see that it's so hard to pinch that 2-hour profit or 3-hour profit. It seems like almost impossible. But remember, guys, the first the first half, you're going to see those 4, 5R, 6R gains in trades. And in the latter half, you're going to see that follow through becomes harder and harder because you don't have the catalyst behind market that's going to move the market. Okay, and then you need technical analysis skills. You need to know support resistance. You need to know, basic elements from the chart. You know what they represent, and we're going to talk a little bit about charting when we're going to move to live charts. So, what does the technical image really reveal? And here's what we're going to talk about. It reveals the trend, right? It's going to show you whether a stock is uptrending or whether a stock is downtrending, and whether it is sideways, right? For swing traders, I advise them to stay away from sideways markets. Support resistance, very important catalyst. It is imperative that you pay attention to support resistance areas, minor support, major support as well. They're equally as important in trading. Trading patterns, also the technical image shows you the trading pattern. Let's say, for instance, if a stock, how the stock is moving. Is it moving straight up? Is it moving from swing low to high and then consolidating and then from that swing low to high again? Or is it downtrending? Is it waterfalling down? So it tells you a lot about the pattern, and the pattern tells you a lot about your entry. So that's why it's super important to keep that in mind, the pattern. Also, it shows entry points, so it shows you exactly where to enter the trade. It also shows you where your stop level should be, and it tells you your potential profit target. It also shows you market participation. Okay, now I know that potential profit target here, there's some things that you would say, yeah, I know if I'm going long, I'm going to look to the left of the chart and I'm going to look at the next resistance area. But guys, what if you're trading the SPYs? What if the SPYs are right now at the, let's say, the high, the all-time high? What if you're trading a stock that is at all-time high right now? How are you going to be able to know what the potential profit target is? Well, this is where technical analysis comes into place, and this is where you have to be very well educated in order to determine that. And there's a simple formula for that. You're going to use Fibonacci's, and Fibonacci's are projection areas that a lot of professional traders, most of the professional traders that I know, and I've been mentored by some of the best professional traders, those are areas that they look to book some profits. Okay, all right, so let's take a look at a technical image right here. So here is a chart of Qs that a chart of Facebook. Actually, it is right here. It is a daily chart that shows you the trend. And I chose some pictures that are not picture perfect because, guys, in real life, this is what you're going to see. You're not going to see those picture perfect. Those picture perfect are for manuals, but in real life, you're going to find really, really sloppy charts, okay, at times. All right, so here's an uptrend. You can see from swing low to high right here, and again, pull back into this area from swing low to high, and then a steeper pullback into support area, peekaboo low into the 50-period moving average, and gap up, continuing the trend higher. Okay, now, the second thing that I told you is that the technical image shows us support and resistance levels that are very important. Here's a major resistance area that has developed on a triple top right here on a Facebook daily chart, and also support right here from the most current price action from this point. There's also a support level that has developed here, and you can see that it broke through that level, and it's also a secondary level of support that was developed here that broke through that level. So this is the major level of support right here. So it tells you support and resistance. Also, the trading pattern. Remember I talked about from swing low to high, it's very important to focus on the technical pattern from swing low to high right here, and then an area of sloppy consolidation, and then gapped up and continued higher. So it tells you a lot about what's going to happen. So the fact that it gapped up above resistance here, more than likely, 80% likely that the trend will continue, especially that it formed new all-time highs right here. Okay. It also shows entry points. So as it gapped up, I've watched this stock for 1, 2, 3, 4, 5 6 days right here, and I, some of you know me and know that I truly love consolidations, and I'm really, really good at this. Right here, we had a breakout of this consolidation area with a continuation higher. So it shows you the exact entry point. So above this resistance area, a few pennies above this resistance area, here's our entry, okay? So it shows us our entry. It also shows us our stop loss level, our controlling risk level at the very bottom. Remember, our entry was right here at this rocket candlestick right here. So right here is our stop loss area. It gives us our stop loss area. All right. And then our profit target area. Remember, if the stock is at all-time highs, so I didn't choose one that had I didn't choose a stock that had a previous high right here because it would be very easy. I chose the stock that I can show you how projections work. So if it has all-time high, a little bit of education takes you a long way. You would know that your profit target area for the swing trade is at $70. Okay, and this was our entry area. This was our stop right here, and this was our entry. This candlestick right here was our entry, and this was our reward. Okay, another thing that the chart shows us is the volume right here and the market participation, which is very important to know whether it is a low volume day, whether it is a very active day. You could actually see the footprints of professional traders. So some conclusions to this technical image. Perform a thorough analysis of the stock and market conditions to determine if the odds are in your favor. Remember, if the stock that you want to, let's say, buy at that certain point in time is a perfect buy, you have to know if the market is in your favor. You have to know if it's in sync, if it's fully correlated with the market indices, if it's stronger or if it's weaker. So if it is stronger, like I said, if it's stronger than the market indices, most likely that your stock will have high odds of running higher, faster, reaching your profit target areas before the others move. So that's why I know a lot of you here. Richard, I will get to that in just a second. Okay, I'm sorry, I just saw your message right now. Okay, so it is very important to have a perfect correlation of the two. Okay, I'm going to pull it right here. All right, so the red line right here is the 200 period moving average. It is a simple moving average. The blue one right here is the 20 period moving average. And I'm going to show you my screen in just approximately 15 minutes. And the green line that you're going to see on my charts is the 50 period moving average, and the yellow is the 89 period moving average. And these are the moving averages that I use. I also use another moving average for day trading purpose, and that is the 10 exponential moving average. That is a more aggressive moving average and very accurate for day traders. All right, one of the things that you should never do is never chase a trade, and that is never chase a trade. Also, let the chart tell you what to do. Let the chart speak to you. It is so important for the chart to tell you what what to do. Wait for the trade that meets your blueprint at all times. Wait for the specific setups. Like I said, I love to trade consolidations. So guess what? I'm going to look for these consolidations. I love to trade, let's say, buys off support in an ongoing trend that are sitting on the trend line. That's what I'm looking for. So make sure that your entry meets your blueprint. Also, like I said, okay, did I say it enough tonight? Enforce discipline and patience. Okay, you gotta have a lot of patience. Remember that KKD trade? I've been in that trade for more than a month. Okay, devote time to market and technical analysis. Remember, devote 15 minutes, 20 minutes, half an hour to each time. You have, the internet nowadays, offers a lot of information. Just go, just Google moving average, just Google, support resistance. You're going to get a lot of free materials from that. Okay, invest in the technical analysis good class at the beginning and not the end. Don't wait till your account is, is in red. Okay, I'm going to show you an hourly chart of support resistance, just a few examples right here. Support resistance on the 1 hour chart. This is resistance. That translates into support. This is actually minor support right here. And actually, this is the candlestick that we entered the trade on. This was our stop underneath, and we were very confident. This is a very good area of adding more shares and reducing your stop as well. Knowing these levels create confidence, so see how easy it is to have a little bit of confidence from your education, because education offers you that specific confidence. Also, we have a daily chart. This is an uptrend right here, reveals the uptrend, $65, so it went higher. Actually, we capitalized on this. We got in the trade at $63, and it ran up to $70. $69 was at this point when I took this picture, and I took this picture because of the consolidation that was developing here, so this is an alternate add and reduce opportunity. This is a trade that I've done at the beginning of the year. It was a great trade on Target. Remember, Target was in the news, and we had a very good, perfect entry right here. This is a waterfall. This is a waterfall sell right here that happens. So not all the time we get those pivots. Okay. Decision area was right here, waterfall right here, resistance right here, but this is where our stop was, right above this candlestick. Severe downtrend that was on the weekly chart. Made the daily chart of the Qs break this area of support right here, and water fell to this target area of $58, and we actually cashed in at $55, so that was our exit point. JCPenney, this is another trade that we did based on support resistance. This is the decision area right here. This is the sell setup that we took in the swing trading program, in the swing trading service, and we had a very tight stop. We took profits at $5 right here. This is the target profit target area of $5. Beautiful follow through. And actually, JCPenney is one of the stocks that I'm looking for a buy opportunity over $9.50. So I hope we have time to get to that. Risk to reward, the success of the trade can only be measured in terms of risk. So before initiating a good trade, you need to determine, one, the fixed risk, and then you need to determine the potential reward. Without this, you cannot trade. So how's that? Technical chart will determine, number one, your entry, number two, your stop, number three, your target, and number four, your risk, and number five, your reward. So how does this translate? Well, it is very simple. Entry minus stop equals risk, and target equals reward. So not complicated, right? Let's take a look at the chart right here. We have Facebook again, and this was actually an alternate entry right here at $64.40. This was actually an ad, but you know, there are a lot of traders that took this setup as it was. This was on a 1 hour chart. This is a perfect swing trade. Also a day trade for that matter, with a very tight stop. The stop was under 64. The entry was 64.60. So 64.60 entry minus the stop, like I said, equals 60 cents, and that is the risk. So the risk represents one risk unit. Our target was $67 for that particular day, so our reward was $2.40, so 4 reward units for this ad. Now you tell me, guys, Intel here. If your entry is $25 and if your stop is $24.40, you tell me here, guys, what is the risk for this trade? And I'll put Intel right here. This was also a trade that I did. Okay, let me show you guys. So where is Intel right now? All right, oh my gosh, it's trading at $31.26. All right, so basically what we were talking about is this area right here. Okay, so you see the big red bar right here, the big candlestick right here. This is it, guys. This is it right here. This is it. This is the consolidation. This is what I love. This is the consolidation, the breakout that brought this beautiful, beautiful trade, Intel. Okay. Now, you tell me, can a trader that has a 40% batting average be better than a trader with a 60% batting average? Guys, do you think that is really plausible? Do you think that is real? So do you think it's real? A trader that is 40% right, can he actually make money? And can he be consistently? Right, absolutely. Thanks, James. Raleigh. Yeah, absolutely. Can be consistent. Why? Why? All right, if you apply a good risk to reward ratio for each and every single trade, you can make money consistently, and you will make money consistently. Just make sure you don't risk more than your reward. That is key here. This is, if you will, the holy grail of trading. Absolutely the holy grail. All right. Let's take a look right now. Facebook right here. This is another example of, this is the daily chart stop loss. This is an older trade when Facebook last here was at $33, $34, stop loss $33, buy and trade long area $34, $38 was the exit area, was actually the target area. So basically, profit $4, risk $1, you made 4 times the risk amount. This is what is key here. And if you traded $500 risk per trade, you would have profited $2,000 on this trade. Okay, and by the way, guys, all these charts were trades that we actually took in the program. Position sizing will determine how many shares you're going to trade when based on your account size, your daily loss limit, and position sizing will also determine your risk to reward ratio. All right, guys, so position sizing. I know some of you really, and this is really helpful for a lot of new traders, okay? So when I first started trading, I had a chart just like this glued to my monitor, okay? So it would be super simple for me, all right? So here's what we have, $200 risk per trade. This is our risk unit, right? 1R is $200. If you should have a stop on a trade with 50 cent stop on a trade, day trade or swing trade, you know that your amount of the amount of shares that you're going to take is 400 based on that $200 risk. Okay? So the one position size rule that will bring green to your account consistently is use the same risk on all trades. You have to apply the same risk on all trades. Same risk equals same losses equals consistent control losses, because this is what is important here, and this is the key. Winners are the only variable in this equation. So a little bit about trade management. Okay, bad trade, stop out, no problem, part of the plan. But what happens if you have a good trade? You need a very good management plan in order to end up that trade successfully, right? And why is that? Because you want to capture profits for multiple targets. One more thing, remember, let the market take you out, let the stock take you out. Don't take yourself out of a good trade. Eliminate fear and greed by having a good management system in place, right? You don't even need to look at a chart, right? Because you're going to know that you have a management plan in place, and unless it does this and this and that, you're not going to touch that trade. Every strategy will have a different plan, like I said, because price action differs from one stock to another. Each position size will have its own life and the capability to manage change in market conditions. You're going to have a defined target, so you're going to know at all times what the target is, whether it is a previous swing high or a previous swing low or a predetermined calculated target based on Fibonacci. And a take profit area. And also, it'll help you alleviate over managing trades. 3 approaches. First of all, if you're a beginner trader and some of the trades really correlate to this bar trailing, and I'm going to show you an example in just a few seconds. The second and my preferred, the only method that I trail is pivot trailing. And the last one is moving average trailing, which is not so accurate, okay? But it helps. It helps. It at least tells you the trend, all right? I'm going to give you some examples because I really want to go over the market overview. I really want to we have about 18 minutes left, and I want to finish this and then go over the market. I want to share with you the 12 stocks. Target, remember this is the trade that we took right here at this very sell setup that happened on this that very day in January, beginning of January, and we had a waterfall down. Now, look at these bars precisely. You would have trailed bar by bar right into the first target area of $58. At here, you would have been out of the trade because this bar traded above the previous bar, but the next day you could have taken this trade short again to follow through to lower target. So even if the trade took you out, even if the management trailing system took you out of this trade, you would have had a re-entry opportunity to get back in the game. So never abandon a trade that you took. Always go back to the trade and see what it does. Also, pivot trailing. Look at this beautiful pivot trailing right here. Okay, so you can see that price action really does not favor a bar by bar trailing in this case, but it rather favors a more pivot-based trailing. So here you have the base, you have the breakout that happened right here, you have a steep pullback right into support again, and you have a breakout again, and you can see the pivots. So your entry was here, this is your stop is still respected, the stock moves higher, another pivot is formed right here, this is your stop. Stock pulled back, never challenged the previous low, moved higher, another pivot is formed, moved higher, the stop is still here, moving higher, consolidating. Once it's consolidating here, you're moving your stop right here, right above, actually this was in the $59 area, moved higher into the 62 and change area right here, powered up. You could see that it got extended from the moving average, meaning it got extended from the current trend. So if you were to draw some trend lines, you could see that it's on top of the ascending channel right here. You could even take some profits right here at the first sell setup, or you can wait for another pivot that is slightly higher, as you can see from the previous low right here, and so on. So this is pivot trailing. This is my favorite preferred method of trailing that keeps me in the trade longer. Now, moving average right here, you can see the moving averages. And Richard, here are the moving averages on the chart. The 10 exponential moving average is pink. The blue one is the 20 period moving average. The green one is the 50 period moving average. So you can see how the stock NSM is following. This is the daily chart. You can see how it's following the 10 exponential moving average. You can see right here the 10 exponential moving average that is followed on the 1 hour chart in QCOM for this case. Just a quick recap, have a game plan, guys. It is so important to have a game plan. It's going to define the way you trade. It's going to simplify your life. It's going to turn your account to green, deep green. Also, technical analysis, it is very important to master. Risk to reward, it is very, very important to apply the correct risk to reward. Remember, the risk must always be smaller, and the reward has to be at least 2-3 times at least the risk. Position size according to your account size. Remember, if you're a beginner trader, 1 or less than 1. If you're a conservative trader, 2% of your account size. If you're a more experienced trader, 3 to 5% of your account size. Trade management, very important to have a game plan for each of your trades. Remember, there are different trading methods depending on price action. And I have a special surprise for you guys, something that I have never, ever done before. I have an active investor trading plan class this Saturday coming up, July 12th, from 9:30 a.m. to 3:30 p.m. And this is not a trading plan, guys, that I will tell you what you need to do. This is my own trading plan, how I trade it. This is the trading plan with the checklist that you actually have. And can actually go through as the day develops. It is a swing and core complete trading plan. It is a custom trading plan for stocks and ETFs. It's custom, ready-made, and it teaches you when to enter the trade, where and how to place stops. It'll teach you how to trail the trade, and it'll teach you damage control. I also have scanning techniques. I have a complete action plan and much, much more. You're going to get a manual and a full recording of this class as well. The class is actually for $4.99. I'm offering it for $39. You can register at TradeA-Thon. It's right on our front page. And thank you, Yana, for posting the announcement. You can click on the link. It's going to take you right there. You know, like I said, this is a truly complete trading plan class, unheard of, $39. So I'm gonna take this out right now, and I'm gonna go to what to expect in the market for tomorrow. Okay, so let's not talk after the fact. Let's talk about what's gonna happen right now. What's gonna happen tomorrow, right? All right, so again, this is a chart of this is my platform setup, as you can see right here, and I'm watching at all times. This is my trading setup, if you will. I have all the time frames, minor time frames and major time frames of the stock that I'm trading, of the cues, of the spies, of whatever I'm trading. I have the 1 minute, I have the 2 minute, the 5 minute, the 15 minute right here on top, and I have the major time frames, hourly, daily, weekly, and monthly charts right here at the bottom. And for those of you, if you have any questions on my charting, if you like the setup that I have, I can share it. I could truly share it with you guys. Just shoot me a link, just shoot me an email and I'll send you the link of the platform. So the cues today, so we had a beautiful 2013 following an election year, follow up beautifully. We had a congestion area for about 3 to 4 months right here. We finally got out in June. We triggered and broke above this range, followed through higher into the $96, very close to the $96 area, and there are projections for $98. Also today, the cues gap down based on, we did have some overnight news from China. We did have some Australian news that influenced the market. We do have the crisis that is happening, that is happening in Israel, and we did have FOMC meeting minutes yesterday. So that is today, and I wanted to share with you what the trade, what today's trade was. I'm gonna just zoom in a little bit on this chart. I'm going to show you exactly what we did in the swing trading alerts. So what we did right here, we evaluated this formation, this cluster right here, with support formed at $93.63 and with resistance right here at $94. So we have 9:30 till 10 o'clock right here. This is the 10 a.m. New high set at 10 a.m. straight right here. This is where we entered at $94. And $94 is actually a whole number, psychological number. So this was our trade entry, $94, stop below $93.62, and our targets were $94.50 and $95 right here, right on the nose. And what happened after it hit the target? It went slightly higher to about $95.06, and it started to retrace. But nevertheless, it is a very, very strong consolidation. It was expected. $95 came from a profit target area, came from the fact that previous pivot high was $95 right here on the hourly chart. What to expect for tomorrow? You can see that today we barely triggered right here a buy off the 20-period moving average, trying to take out a previous candle onto the daily chart and trying to continue higher into the previous high. So if tomorrow we're going to trade over $95, so watch this area for those of you that are day traders or swing traders or really want to get into the cues, or just trade the cues tomorrow, watch for a $95 area. If this pivot is going to hold $94 and about 50 cents right here area, this is the area that you should look for. So if we're going to get a pop over 95, this is going to be the stop. Look for a profit target area of $95.75. Look for a continuation into higher targets, into projections of $96, $96.45, $96.80 and $97 for the day if we're going to get a bullish day. So this is what we can expect for the cues. If the cues are going to continue to retrace, if we're going to revisit the $94 area, this is also a minor support area right here. But if we should breach this area, look for a continuation lower into the $91.70, and a continuation if we break that area into $90.71 would be possible at this point. So we're going to take it one step at a time. All right, SPYs. Okay, let's go to the slides right now. Okay, all right. Okay, platform froze for a little bit. All right. Sorry for that. Okay, so the spies, you could see right here from the hourly chart, it was a little weaker than the Qs. You could see the spies that never reached a previous high on the hourly chart immediately formed 130, guys, 130 formed an hourly sell setup. Now, if this area holds, if 196 area holds, and if we're going to get a break over 197, we can expect a continuation higher into 197.29, into 197.56, and we can expect a continuation into 198.30. So that is for the spies. If we're going to continue the sell, if we're going to get, if the price is going to challenge 196, it's going to breach 196, expect a continuation into 195 and 194 area. So this is what we can expect for the spies tomorrow. So these are the parameters that we're going to be trading based upon. All right, we got 10 more minutes, guys, and 7 rather, and we just have time for some stocks right here that I'm watching. I'm watching Eli Lilly. Right here onto the day, right here, beautiful consolidation onto the daily chart with heavy support under $62. I'm going to watch this area of $62.50. You can see it clearly more on the hourly chart right here, $62.70. This is the area, and the real trigger is going to be over $63. But for a swing trade, I'm going to try to let myself in early, $62.75 around this area. By the time it reaches the trigger area, I'm already up into my account. MSFT is developing also a beautiful range onto the daily chart. As you can see right here today, we had a gap down. Fast filling it at, to $42, and we just printed at $42 right now. $42.20 is going to be the watch area for a continuation higher, and does have a potential for a core trade into the $45 and $50 area. Also, Facebook, interesting scenario that it has onto the daily chart right here. $66 is the trigger for a long for Facebook with continuation into the $68 and $71 of the previous high that was set on February 24th. JCPenney, like I've mentioned before, it is a watch area, a strong consolidation that is happening right here onto the weekly chart. This is more of a core trade. I love to see JCPenney over $10. So watch JCPenney over $10 if it should reach that area. JNS is also on my list. Okay, JNS is also on my list. Going to watch it over $12.70. Would be over this cluster here with the potential to continue higher into the $13 and $14.50, even $15 for a swing trade. HK. This is another trade, really strong potential, trying to run higher. Over $7.20 with a stop under $6.63. We're going to watch this area continuation into the $7.54 is going to be the first target on this. $8, we're going to watch it into $9. We have a target on it for a core position into the upper $12 and change. HOLX, well, we're almost halfway through the list. Okay, HOLX right here, very strong consolidation onto the daily chart, $25 and 50 and about 60 cents right here. You can see the base developed on the 1 hour chart, $25 held. Whole numbers also a minor support level with a continuation higher into $26, $27, and $28 projection. RFMD, this is a superstar trade for this year with a tremendous ascending move for 2013. It broke out this year. Last year we had a huge consolidation, broke out off $6, reached 200 period moving average at $10. This is the pullback right here. Watch this stock, guys. This is going to be a beautiful continuation. Just watch it. Take a breather right here. Beautiful continuation into the end of the year. STX. STX beautiful consolidation as well, over $59 and about 40 cents, $57.70. It does have a beautiful, strong bias to continue into the $62 area. UA Under Armour. Also a consolidation happening on the daily chart with support 57.50 and $60. $60.20 is going to be my double top watch right here. I would like to break this pullback and then hop in this UA. MU. This is a very, very strong stock with a huge potential. It had a great 2013 and great 2014. It seems that all the pullbacks are viable in the stocks. We're going to see if this is the case right here. Over $33.20 stop under $32 with projections, guys, into the $39 area. So MU, watch for a swing. And TSLA, Tesla right here pulling back, and this is the game plan for Tesla. I know that a lot of you trade the stock, and I receive messages almost every week about Tesla. So here's the game plan, guys. If Tesla will break down below $215, $215, it will retrace more, and it will retrace into the $200 area zone. But if we're going to get a break over 225, we might be able to continue the trend back to 240, back to 250 area. Okay, these are all 12 stocks that I'm watching, guys, and I'm really glad that I had a chance to go over them. And I'm going to put up the last slide. Okay, I'm going to put up the last slide right here, guys. So remember, Active Investor Trading Plan class is this Saturday from 9:30 a.m. to 3:30 p.m. You're going to spend time with me. I'm going to be your host. Remember, it is a complete core and swing trading plan. It is ready-made. It is custom to what you need to do precisely. You saw the way I read charts, and this is exactly what I'm going to teach you how to do it in this class. I'm going to teach you also damage control when the stock trades against you and you don't have a stop in or the stop does not hold. I'm going to talk about some scanning techniques. I'm going to show you exactly how I scan and how I do it. Also, complete action plan and much more. Remember, you're going to get the manual and recording, and you're going to have access to questions and answers for life. All right, unlimited. Okay, so any questions, guys? Yes, the class will be recorded. The class will be recorded, and archive link will be emailed to you right after the class. Okay, $39. This is a grab. We only have 100 spots left, and we only offer 100 spots. And this is something that we've never done before for this price. Okay, so if you should have any questions, remember you can email me at info@tradeoutloud.com. I welcome all your questions. Yeah, James, me too. You and me both. Yeah, it saves you precious time. Thank you so much, Yana, for posting the link to the hot deal. Remember, it's right on the front page. Yes, I do short the market. I do short the market at times, but right now you have to trade with the trend to capture and to have most of the follow through. And I do trade a lot of stocks.
All right. Well, Anka, thank you so much for a fantastic presentation. You covered a ton of material very efficiently in 75 minutes, and I